Yeah, good morning, guys. Good morning, everyone. How are you doing? Can you hear me? Can you see me? Sorry, I need to bring my microphone. Just give me a few minutes. Let me bring. Okay. Just a minute. Let me set up my microphone. Okay, good. Okay, I think it's working. Can you guys hear me? Can you? Okay, good. I can see someone saying you can hear me. You can see me. Yeah. Good morning, everyone. Good morning, Truth TV. Good morning, Mbakwe, Obodia, Sati. Good morning, everyone. Good morning. So just a few more minutes. We have like 2 minutes. Let's just allow a few more people to join in before we continue. Okay. So just 5 minutes so that more people can join us before we go ahead. Okay. Good morning. Please, as you're joining us, let's know your name and where you're joining us from. Let's know your name and where you are joining us from. Okay. Once you join, let's know your name and where you're joining us from. Let's go, guys. Drop your name and where you're joining us from. Good morning, everyone. Welcome. I see you guys. I see you guys. Just a few more minutes. We'll be starting at exactly 11:08 so that we can get more people to join. Okay. So just drop your name and your location, where you're joining us from, your name, and where you are joining us from. There are just a few things I want to teach today. I want to start a series that will run from now to the end of September, where I will take out time because, like I told you guys, I have I have noticed that most of the contents we put out on this channel, um, people that are not, at least that don't know the basics of forex, they seem to be floating. Our channel most of the time focuses on helping traders that are already trading that are possibly not profitable. So unless you go for a beginner program, which is absolutely free, then you can actually learn the basics, like from what is forex. So I decided to dedicate the month of September, to just take out some time to just explain some basics that are very, very, very necessary. Okay. So we'll be doing a series. This will be part one of this series that we'll be having, this month, part one. The following week we'll do part two, like that, until we get to the fourth part. Okay. So by the time you join from now to the end of September, at least if you do not miss any session, I promise you there is absolutely nothing about the basics, in forex trading that you would not know. This is my promise to you. So I would encourage every one of you not to miss out on any session, throughout this month. Okay, it's going to really be amazing. I can't wait to start unleashing amazing stuff. Okay, so if you know somebody that needs to be a part of this series, you know someone that should be here that is not here yet, please let them know that we are live and we'll be kicking off in 1 minute. In 1 minute would be going ahead. Okay, in 1 minute we'll be going ahead to. Okay, so good to see everyone once again. Good to see every one of you. Some of you have been constant in here right from the very first day we started this mentorship series. We started, I think, around February, every Monday morning to come on live to teach you guys how to trade the Forex market. And it has been amazing. It has always been amazing with you guys. So I'm very hopeful that today will just be another amazing session. So once you're joining us, let's know your name and where you're joining us from. If you notice, I wasn't able to go to the office today, so I'm streaming from home. From my house to work is like maybe 15 minutes drive, so I don't want to take up much time already. So I decided to stream from home before heading to the office this morning. Okay, so hopefully next week we'll be beaming from the office as usual. Okay. So meanwhile, just some question and answers. If you've been joining us for any of these sessions, previous sessions, let's know, and let's know what your experience has been so far. Have you been learning anything at all from all the previous sessions? If yes, type on the chat. Type on the chat. Let me know. Let me know you guys have been enjoying this amazing series. Okay, if you've been learning, if you've been joining us live every single time we come on here, please let me know that you have been joining us live. Okay, and let's know whether you've been learning something from these our Monday sessions. Okay, and please feel free to ask your questions. If you have any question bothering the Forex market, any question at all, feel free to ask. Okay, feel free to ask. I'll probably attend to some questions before we move straight into our our classes for today. Okay, so please ask your question. If you have any question about the Forex market, please feel free to ask so that we can go ahead. We have like 1 minute. 1 minute, 1 minute. I'll be okay. So let's get going. um let's get going. Good. So good to see everyone. Emmanuel from Lagos, good to see you. Bright from Enugu, good to see you. Chinedu from Akure, good to see you. Joshua from Abuja, good to see you. Okay, so we have some first timers here. That's good to hear. Okay, so like I said, this today we are starting a series that will run from now to the end of September. Where I'm trying to, touch the basics. I noticed that I've not been talking much about basics in Forex market, so I will try throughout this month to talk a lot about basics. So for some of you who don't know at anything at all, anything at all in Forex, at least just to get you started, to brush you up to speed and to, get you up and going. Okay. So for some of you that don't know, we have a basic mentorship program which is absolutely free. For some of you that don't know already, we have a basic mentorship program that can help you get started. But I'll just start from what is Forex, like from basic, what is Forex. I'll just run through the program and then maybe we just anywhere we stop, we'll continue from there next week. Okay, so basically, Forex, somebody said, is there a Zoom link to join? Yes, it's not a Zoom link, it's a program. Let me just type where you can get the program. That's a free program. Okay, so it's absolutely free, you don't have to pay anything. Oh, Okay, so if you go to this link right there on the chat now, it will just take you straight to where you can, get started with the basic program. Oh, sorry, that was a mistake. Sorry about that. I didn't type the link well. Let me. Okay. Okay, don't worry, guys. Let me just give you the link at the end of the class. I'll give you guys the link. Okay, so no worries on that. I typed it wrongly. Okay, so let's go. So most times when people hear about forex markets, there is this instant assumption that forex is the same as crypto market. Every now and then people come to my DM and they ask questions like, okay, I want to start trading crypto, or maybe I want to buy Bitcoin. I want to buy Bitcoin, or I want to buy, maybe Ethereum or something like that. And they're always shocked when I say I don't have any Bitcoin. They're always shocked when I say I don't have Bitcoin to sell, and I don't have any crypto, for sale. Okay, of course I have some stacked. Okay, for hopefully future investment. Okay, but I don't have any stacked. So most people are shocked when I say that, because once they hear forex, I assume that forex is the same thing as crypto trading. Crypto trading is the same, but they are absolutely not the same. Forex trading simply means foreign exchange. Okay, it simply means you trying to sell a currency at a particular price at a particular time against another currency. That's the simple definition of forex. That's foreign exchange. That's a short name, forex. Okay, so when you're trading the forex market, all you're trying to do is to have a currency that, okay, and not unfortunately, very fortunately, these things are becoming much more easy nowadays. Back in those days, for you to trade forex, you need to have a particular amount of money. I think it was about $1 million or so for you to be able to participate in the forex market. But somewhere down the line, we now have brokers that can give you leverage. Okay, leverage for you to trade the forex market. So it makes things much more easier for us, trading the forex market now. Okay, now let me just go ahead and give you an introduction into the forex market. Let me see whether I can share my screen. I have a full that I will just use throughout this. I'll just run it through, like, um let me okay, good. So let me know if you can see my screen now. Let me know if you can see my screen. Let me know if you can see my screen. Can you guys see my screen? You should be able to see it. Okay, good. I think you should be able to see it. Okay, so this is absolutely free. If you want, you can join our Telegram channel. We can send it to you for free. Okay, so it just gives you the base about the forex market, which I'll just try to explain. Maybe I'll just do chapter 1 to maybe 2 or chapter 3 today, then we'll continue next week. Okay, so financial market usually refers to any market where financial securities and derivatives are traded. Okay, you should know what is securities and derivatives. Okay, it's simply anything. Financial market is the umbrella name for anything that has to do with securities and derivatives, which includes the stock market, the bond market, the cryptocurrency market, and the commodities market. Okay, when somebody says financial market, is not always talking about forex. Forex is not financial market. Forex is a part of the financial market. It is a type of the financial market, but the financial market is an umbrella name, okay, that consists of all these other things: the stock market, the bond market, cryptocurrency market, commodities market, indices, synthetics, and all of that. Okay, those are all under the financial market. Okay, so assets traded on any of this market are listed or regulated exchange bodies or over the counter OTC. Okay, now, so what is Forex basically? Some of you, you've seen this chart, you've seen this, all these lines, and you're wondering, what, I mean, what the hell, what's in the name of the Lord is all of these things. Okay, I had this one friend that every time I'm trading on my PC, he's always wondering, like, what are all these lines? What are all these lines? What do they mean? Okay, very simple. As I already explained, is a combination of two words. Okay, foreign exchange. Very simple. Okay, now the forex market is the largest financial market in the world with a liquidity of over $7 trillion on a daily basis. Okay, this simply means that out of all the markets that are under the financial market, which is stocks, bonds, cryptocurrency, derivatives, commodities market, synthetics indices, and all of that, options market, Forex market is actually the largest, okay, with a liquidity of over $7 trillion. What it simply means that $7 trillion exchanging hands between people every single day. That means every single day, it just feels like $7 trillion is like hanging on the air, and people are grabbing. Somewhere, maybe somebody in America is taking $1 million out of that money. Somebody in Nigeria is taking $200,000 out of that money. Somebody in India is losing $1,000. Somebody in Morocco is taking $2,000. Another person from Netherlands is losing $3,000. Somebody from China is making $20 million. So somewhere at the end of the day, over $7 trillion has actually exchanged hands. Okay, that's basically what it means by $7 trillion liquidity on a daily basis. It's not one off. Every single day, $7 trillion is exchanging hands between people, all over the world. Okay, and the stock market is actually the second largest, with a daily volume of over $200 billion. I mean, that's quite huge. Okay, and the New York Stock Exchange, of course, you guys should know what stock exchange means. It's simply like the headquarters of stock trading in America. That's the New York Stock Exchange. Of course, Nigerians also, we have our own, which is the Nigerian Stock Exchange. Okay, it's also it's also a stock market, right? So, but forex market is actually the most volatile, is the biggest of them all, and is actually the easiest to trade. Okay, so just a quick history about the forex market. Um, this might be a bit, I don't want to go too far in this explanation. So explaining how the whole thing started from Greek, Egyptians trading, silver coins, and all of that, it might just be a bit, I don't want to go too far, okay? Because this is more like brush up, okay? So if you need a full training, I'll give you guys a link to access the full basic training at the end of this class, okay? So if you want to access the full basic training, I'll just give you the link at the end of the class, okay? So in layman's terms, trading simply means exchange. Okay, trading, when you're trading, you are exchanging money for money. Unlike when, let's say, maybe you're selling phones or you're selling laptops, where you have to, if somebody pays you, let's say, $1,000, you now give the person a laptop or give the person a phone. Okay, but in trading, you're exchanging money for money. You're using money to buy money. Okay, you're using money to buy more quantity of money or more quality of money. Okay, and you get to understand how that works very shortly. Okay, so forex trading in layman terms simply means exchanging a currency with another currency at a specified period, at a specified price, and at a specific time. Okay, so whether you make a profit or a loss out of that trade, it is still called trading. So there are three things to note very, very well here. Specific period. So trading cannot happen in space. Okay, it can't happen in a vacuum. Okay, you have to be exchanging money within a specific period. Okay, and it has to be at a specific price, and it has to be at a specific time, right? So it's not a there has to be a time of exchange. There has to be a particular price of exchange. Okay, so that's like basic terms, okay, of forex trading. And I mentioned here, profit is made in trading when you sell a particular currency at a particular price higher than the price you initially bought that currency. That's quite simple, okay, to understand. So let's just go over. Let me explain trading versus investments. Sometimes when you hear somebody trading the forex market, you hear them say things like things like I'm an investor in the forex market, I'm an investor in the forex market. But by the time you look closely into what the person is doing, the person is not doing anything that looks like investment. He's actually just trading. Okay, when you are investing in the forex market, it simply means that you are there for the long-term game. Okay, you're playing the long-term game. You are there for, you buy a currency or a currency asset and you leave it for many years, okay, sometimes many months. Okay, but when you are buying a currency asset hoping to sell it at a very short period to make money, you are actually trading, you are not investing. Okay, so when people say I'm investing in the forex market, they are not really investing. Okay, they are simply just traders in the forex market. So it's most times people find it hard to make that distinction. Okay, so in summary, investment is long term while trading is actually just short term. Okay, are you guys enjoying this lecture so far? Is this too basic? Let me check the chat. Let me see what you guys are saying. Please, if you enjoy, just let me know. I think this is too basic. Wow, where is everybody? I think this is too basic. That's why everybody has much people are not really interested in this. I don't think you guys are interested in this. Are you guys interested in this? It's because a few, I think 2 or 3 people told asked us to do basics. That's why we decided to do this basic. Because if you guys are not enjoying this, I'll just let this series slide. Okay, I'll just let this series slide because I feel like this is too basic. Okay, I'm not a basic person. I don't like talking some of this stuff. Okay, I like talking to traders who have some experience, who have some level of experience. It becomes very easy to flow with you when I mention some things, and these are things you're experiencing, real time. Okay, so okay, let's just do a poll, okay, because I'm seeing there's a very low turnout today, this morning, which is very discouraging, sorry. Very low turnout. I mean, this is like, 12 people. Wow, this too low. Okay, so let me know. Should we continue? If you want us to continue, write continue. If you want us to stop, just type stop. Okay. If you want us to continue this basic series for the month of September, type continue. If you want us to stop, just type stop. We'll just take a poll, and whatever decision we make here, we'll move with it. Okay, because this feels too basic. So let's go, guys. Okay, somebody saying continue. Okay, who else? I'm seeing one person continue. Who else? Who else? Who else? Who else? Okay, I'm seeing another person continue. Steven says stop. Okay, who else? Only 3 people have voted so far. Okay, I'm seeing another continue. Okay, continue. Okay, so I think more people are actually voting for us to continue. Yeah, somebody saying to help other newbies. Okay, well, that's fine. So let's just continue. I'll just run through it because I've already addressed some of this stuff already on the free program, which I'll give you guys the link at the end of this training. So I think I'll probably just refer everyone to there by the end of today's class. So by next week, let's just continue something fresh. This feels like very basic. Don't worry, Demilade on Yinsan, I would give you the link to access the basic training by the end of this class. Okay, so we'll not have to continue this next week. We really need to just change the topic, okay? Because I see most people are not that much interested in this. Okay, so let's just continue just for today. Okay. So let's go ahead to module 2. Let's talk about trading sessions and terminologies. Now, forex market is divided into four trading sessions. There are four trading sessions that actually make up the whole Forex market. Okay, we have the United States session, the London session, the Tokyo session, and the Sydney session. What that simply means is these are periods of time where a certain setting what we would call, if there's anything like headquarters for trading, okay, the four headquarters for trading are open during these sessions. Now, forgive the language headquarters, just I don't have any other word to explain it with. Okay, so during the from 22 GMT, which is about 10 p.m., the market opens, the Forex market opens, the first Forex trading session opens by 10 p.m., which is this Sydney session. Okay, Sydney session opens by 22 GMT, which is 10 p.m., okay, and runs for 8 hours, closes by 6 a.m. in the morning. Okay, now the Tokyo session, which is the second session to open, opens 2 hours after the Sydney session opens, that is by 12 midnight. It opens by 12 midnight and runs for another 8 hours from 12 p.m. to 8 p.m. So that means the time where Sydney session is open, after 2 hours, the Tokyo session is open, and the two sessions are open from that 12 p.m. up until 6 a.m. when the Sydney session now closes. Okay, and then the Tokyo session closes 2 hours later. Okay, now at the time the Tokyo session is closing at 8 o'clock in the morning, the London session is opening by 8 a.m. Okay, at the same time the Tokyo session is closing, the London session is actually opening. Okay, so the London session opens, runs from 8 o'clock, 8 a.m. to about 4 p.m. in the evening, and then United States session opens by 1 p.m. 13 GMT, and then runs up until 21 GMT, which is about 9 p.m. 9 p.m. That's Nigerian time. Okay, 9 p.m. Nigerian time, and then the Sydney session follows suit immediately. So these four sessions keep running concurrently every single day. Every single day we have these four sessions running at the background every single day. You understand? So there is no single time that a particular session is not open. Now that does not mean that when the Sydney session is open or closed, that you can't be trading any particular currency pair. Okay, all the currency pairs can be trading during any of the sessions. You can trade every single currency pair during any of the sessions. Okay, the only distinction is the fact that there are some currency pairs that are a bit more volatile during certain sessions than the others. Some currency pairs are a bit more volatile than the others. There are some currency pairs that uh uh move a bit more. When I mean volatility, I mean the movement. Okay, the movement of the currency pair is fluctuating a whole lot during that particular time. You understand? So there are currency pairs that are distinct to each other during these sessions. Okay, that's just the very simple meaning. So by definition, a trading session is simply defined as a period of time that matches the regular daytime trading hours of a specific location. I already explained what that means. So Sydney is the first to open. Then we have the Tokyo session open. Then London session opens by 8 o'clock in the morning. US session that opens by 1 p.m. in the afternoon. Okay, very simple. Now, in as much as all these trading sessions are open throughout the day, okay, there are trading sessions that are what we call the best trading sessions. Okay, and the best trading session is usually the US session and the London session. Okay, this is usually the two best because they are more like the largest trading sessions. There is more volatility during the US trading session and the London trading session. Okay, and there's something called the peak trading session, which is a time between which the London session is closing and the time that the US session is actually opening. So we call it the market overlap. Okay, so it's what we call market rush hour. Okay, so during that time, there's a lot of volatility in the market. The currency pairs are moving with a lot of speed, and there's just so much fluctuation happening in the forex market during this particular period. Okay, so that's why the US trading session and the London trading session are most of the time the most preferred trading session for forex traders generally. I mean, like all over the world. Okay. So just worthy of note, ideally there is no particular trading session that is generally the best for trading. However, the best trading periods are the times when the market is experiencing high volatility, which is what I just explained to you, between the close of the London session and the open of the US session, which is between 1 p.m. and about 4 p.m. Between 1 p.m. and 4 p.m. Nigerian time, the market, if you notice, the market is usually very, very busy. If you open your chart, the spread keeps changing. I mean, the fluctuations are much during this period because those are peak trading hours. Okay, so and those are things you should note. Okay, now, generally, the recommended period for trading is during market overlaps. Market overlaps are periods when between the closing of a particular market session and the opening of another one. Okay, so let's go over to currency pairs. Currency pairs and asset and what it actually means. I know, especially if you are a trader who knows nothing about currency pairs at all, you're probably seeing somebody say, okay, Euro USD, GBP USD, AUD USD, Euro GBP, currency pairs. Okay, now because you can't trade currency pairs in isolation, you need to trade the currencies in isolation. Sorry, you need to, instance. Okay, if I want to exchange, let's say I own a um Gucci bags. Okay, now if I want to exchange my Gucci bag, you need to pay me money for me to give you the. Now, for currency pairs, very fortunately, you need to exchange money for money. You're exchanging money for money. Okay, for instance, you're exchanging euro to buy the dollar. Let's assume you want to travel outside. For those of you that want to Japan to, let's say, America. For you to travel to America, you need to change your currency. You need to change naira to dollar because you can't spend naira there. Okay, you need to exchange your naira to dollar so that when you travel to America, you have some dollar to spend. Okay, so that process of exchanging your naira to dollar is actually forex. Okay, but that is what we call physical FX. That's physical forex. But in forex trading, that is online trading, you don't need to have any particular currency pair for you to trade that particular currency pair. Once you fund your capital with any broker of your choice, it is assumed automatically that you have all the currencies in the world. You have the dollar, you have the yen, you have the euro, you have the uh, you know uh, British pound, you have the CHF, you have the Japanese yen, you have the Chinese yuan, you have all the currencies in this world, provided you have a capital in your brokerage account, because you cannot trade with a broker. I'll explain what a broker is. Okay, so whether you like it or not, you must, of necessity, you need a currency to exchange all these currencies, and a broker affords you the opportunity to trade all the currencies in the world, in the whole world, without even having them. Okay, so that's why we need to trade them in pairs. Very simple. So a currency pair is a combination of two currencies. One is called a base currency, the other one is called a quote currency. Now, examples of currency pairs include, as I've mentioned, Euro USD, USD JPY, GBP CAD, GBP AUD. These are all currency pairs. It's made up of two currencies. Okay, two currencies come together to make up a currency pair. Now, how are they traded? Now, a base currency, which is usually the first one. For instance, Euro USD is a combination of two currencies, Euro and USD. The euro is called the base currency. The USD is called the quote currency. Okay, so two of them coming together is what we call a currency pair. So a base currency is simply the currency in the pair, is the main currency in the pair, and the quote currency is the currency that is traded against. Now, I will explain what that means shortly so you don't get confused. Okay, so in reality, when a currency, when a quote is formed, they take one value. Let's say the value of euro is, let's say euro to dollar is, let's say, you need, this is just, I'm just giving you like hypothesis. Okay, this is not real, it's not the real value. Let's say for you to exchange, okay, let me use dollar to naira, the one that I feel most of you guys should be able to understand. One naira currently, one US dollar is currently at about 900 naira now, to be fair. Okay, let's just say $1 900 naira. So when you have a currency called USD NGN, which is USD to the naira, the USD is the base currency, the naira is the quote currency. So when the two of them come together, they have a singular value. They denote the two currencies with a single value. You understand? Which is now called the quote. Okay, I'll explain what a quote is also, shortly. Okay, now, so the euro to the USD has one single value. We don't trade, okay, euro is equal to this, USD is equal to this. No, in forex they denote them as one single value. Okay, so ideally, when a currency is bought or sold, the main currency that is traded is actually the base currency. The quote currency is considered the price relative of the main currency that is being traded. You understand it? So the main currency that you're actually trading, the main currency you're actually trading is actually the base currency. The quote currency is just the relative, okay? Is the price relative to that base currency, okay? So in summary, currencies are never traded in isolation. They are always traded in pairs. Now let's look at types of currency pairs. Here I will now explain what I mean by a quote of a currency pair having a single value. Now, generally, there are 8 major currencies currently traded in the forex market. Now, of course, there are more than all these currencies, but these are the 8 major currencies that are traded in the forex market. Okay, these are the major ones. There are some other minor ones that there are also some other, naira is like a minor currency, right? The Norwegian, I think, dollar to Norwegian krona also is also a minor. The South African rand is also a minor currency like that. So, but these are like the main 8 currency pairs that are like the biggest boys in the forex market. So we have the euro. Nickname for euro is fiber. US dollar, of course, guys know bucks. Okay, $20, $10, $50. That's USD. Great British pound, which is pound sterling. You guys know sterling, right? Australian dollar, which is nickname Aussie. Okay, Aussie dollar. New Zealand dollar, which is called Kiwi dollar. Canadian dollar, which is Loonie dollar. Japanese yen, I don't know if they have any nickname. Okay. Then Switzerland franc, which is usually called Sweezy. Okay, so these are like the 8 biggest boys in the forex market. These are the biggest boys in this forex market. Okay, now let's look at the types of currency pairs that we have in the forex market. Now, like I already mentioned, there are major currencies, and of course there are major currency pairs. Please pay attention to the distinction there. Currency is not the same as currency pair. When I refer to currency, I mean one single currency, and when I mean currency pair, I mean like a pair, a base currency and a post currency, guys. Just one second. Okay, so now let's look at some of the major pairs we have in the forex market. Now there are 3 classifications of currency pairs that we have in the forex market. We have the major pairs. Okay, these are the pairs that have either the base currency or quote currency in USD. So any currency that you see that has USD, because US dollar is the most traded currency in the whole forex market. Okay, US dollar is the bata of forex market in terms of volume. Okay, USD is the most traded. So any currency pair that has USD attached to it is usually referred to as a major pair. Okay, so currencies like the USD card, the Euro USD, the USD CHF, the GBP USD. These are all major pairs. Okay. Now we also have minor pairs. Minor pairs are pairs that do not include USD, but at least have one out of the three most traded currency pairs. Now, most traded currencies, sorry. The most traded currencies that aside the USD are JPY, GBP, and Euro. So any currency that includes any of these but does not include USD is called a minor pair. For example, the Euro card, the AUD, NZD, the GBP card. These are all minor pairs. Okay. Now we have exotic pairs. Exotic pairs are currency pairs that crosses any of the major currencies with currencies from developing countries. For example, the US dollar, South African rand, the USD SGD, which is Singapore dollar, the USD Hong Kong dollar. These are developing countries. So when you cross a developing country currency with the any of the major currencies, which is either the USD, JPY, GBP, or Euro, then you now have an exotic pair. Okay, very simple. So let's go through some keywords and terminologies that we have in Forex market. Okay, number one is buy. Okay, of course, you guys know this is the most prevalent keyword we have in Forex market. Buy. Okay, buy a currency pair simply means that you're hoping that the price of a particular currency pair is actually going to rise. Very simple. Okay, very simple. Now, sell simply means that you are selling a currency pair in expectation that the price will fall further downward so you can buy it back. Okay. For instance, just a very simple way to explain this. If you buy, if just let me just give you a simple illustration to explain how making money forex actually works. So for instance, let's say you have I buy two mangoes for 100 naira each. Okay, each of the mango is 100 naira, so I spent 200 naira to buy a mango, and the price of mango in the market now becomes 150 naira for one single mango. If I sell the two mangoes I bought for 100 naira, each of them, if I sell each of them now for 150 naira, each of them, I make 300 naira, which means that I invested 200 naira to make 300 because I bought the mangoes for 200 naira and I sold them for 300 naira. I've made money, right? So, for instance, if the price of mango now falls from 150 naira back down to, let's say, 50 naira, that means that with 300 naira, I can now buy 6 mangoes. Right? At the end of the day, I now have 6 mangoes. Okay, I bought for 200, sold for 300, and I now bought 6 mangoes at 50 naira each for 50 naira each one. So I now bought 6 mangoes. So at the end of the day, I now have 6 mangoes. Right? So that's typically how it happens in the forex market. When you're buying a currency pair, you're hoping that the price of that particular asset goes up so that you can sell it, right? So, and when you're selling a currency pair, you're hoping that the price actually goes down so that you can buy back more of that currency in more quantity. Very simple. So let's go ahead. Long simply means is another word for buy. Okay, when you hear somebody say I'm going long, it means I'm buying. Somebody says I'm going short, it simply means they're selling, right? Now, bulls are simply the buyers in the market. Bears are the sellers in the market. When somebody says I'm a bull in the market, I'm bullish. If you hear somebody say I'm bullish on AUD USD, it means that my buyers on AUD USD is a buy. I'm looking forward to buy. Okay, somebody says I'm a bear. You've heard it in crypto a lot. Where somebody will say we're in the bear market. We're in the bear market. Simply means that the market is selling, right? So trend simply means the overall direction of a market at any given time. So when you say the market is trending, that means it's moving to a particular direction. So in that sense, we have uptrend and we have downtrend. When it's an uptrend, that means it's going up. When it's on a downtrend, it's coming down. So we have range and consolidation. Okay, some people also call this there's another word for it. I'll probably remember the word shortly. So when the market is ranging means that it's going sideways. Okay, it's not going up, it's not going down, it's just moving in just like sideways, just going up and down in the same straight line kind of. Now we have broker. Broker is a company that offers you leverage. Sorry guys, this place is a bit cold. The broker is this is a company that offers you leverage to be able to participate in the forex market. Okay, and then leverage it refers to the ratio of equity offered by a broker for every corresponding capital available for trading. When a broker gives you leverage, they are giving you more money for lesser money. So they can decide to give you leverage for like maybe 1:100. For every $1 you bring, they're giving you $100. So that simply means like you have more capital to trade with at the end of the day. Okay, very very simple, right? Okay, so that's module 1 and module 2. So let's just check. Are you guys enjoying this so far? Are you guys enjoying the classes so far? Probably will continue module 3 next week. That's if you guys are really enjoying this. Okay, any questions so far? If you have any question on what Okay, if you have any question on what we have taught so far, or even if the question is not related to what I've taught today, please ask your question. Let me attend to your questions before we continue. I saw some questions earlier that I said I was going to attend to. Somebody was asking, can you explain multi-time frame analysis? Multiple time frame analysis simply means an approach in the market where you are not looking at one single time frame to make a decision in the forex market. So you're looking at, for instance, the 4-hour time frame, because by the time you proceed, you find out that there's something called time frames. Okay, we have monthly time frame, we have daily time frame, weekly time frame, 4-hour time frame. It simply means the representation of a chart of the movement of a particular currency pair in terms of daily movement. When it's a daily time frame, they check out the price movement of a particular currency pair and plot it out as a graph, each of the candlesticks on the graph representing one single day. Okay, so that's what a daily in a multiple time frame analysis is. So you're analyzing multiple time frames for you to make a decision. Okay, unlike making a decision just based on one single time frame. That's just simply what multiple time frame analysis means. Okay, in layman terms, right? Which other question did I got? Okay, somebody asked, do you advise prop firm? Yes, definitely. I advise prop firms. It's a good way to get yourself good capital for trading. But like I always give disclaimer, getting a prop firm is makes more sense when you are getting a big prop firm account. Okay, this is just my take. This is my personal take, right? It might not resonate with you, it might, but getting a $5,000 prop firm with with $50 doesn't make that much sense to me, because at the end of the day, if you get a $5,000 account, most prop firms give you the maximum drawdown you can have in a day on the average is like 5%. Okay, 5% of $5,000, which is if I'm correct, probably $250. Let me be sure of that. Okay, yeah, $250. Okay, that's the maximum daily drawdown you can get. So in reality, what you actually have in your trading account is actually $250. If we are sincere to ourselves, that's how it actually works. Okay, so if you get a 5,000 prop firm account, really what you're getting is $250. So you're paying $50 to get $250, which is doesn't make that much sense to me. It might make sense to somebody else trading. If it makes sense to you, then that's fine. Okay, so for me, getting a prop firm, you need to like get very big prop firm account. If you're paying, let's say, a typical $200,000 prop firm, it might cost you anywhere between maybe $500 to $1,000. So let's just use the average $700. So let's assume you pay $700 to get a $200,000 prop firm. So 5% of $200,000 is $10,000. So your daily drawdown is $10,000, which is actually what you have for trading. Okay, so when you pay $700 to get $10,000 equity, it makes more sense to me. You understand? So this is just my typical advice. It might not make sense to you, but that's the way I see it. Prop firms are necessary when you're buying big prop firms. Okay. Okay. Somebody said we're enjoying it, even though it's too basic. Yeah, it's too basic. I don't even. It's just to be feels weird teaching some of these things. It's been a long while. so so okay, so but that's it. Any more questions? Any more? If you have a question, even if it's not related to what we have discussed today, okay, just ask your question. Let me just take questions before I go. Then hopefully I'll just talk with my team. We might decide to continue this next week, or we might decide to teach something else. Okay, but I'll give you guys the link to access this training. Okay, so let me type the link for you. So please bring on your question. Type your questions. Type your questions. Type your questions out so I can attend to every question before I go. Okay, good. So that's the link right there. So just click on the link. It would take you to the um to the sites where you can get the basic training program. It's just a 2 hours program, okay, divided into like 30 minutes, some 1 minute, some 5 minutes, like that. But cumulatively, is a 2 hours training session. I did it on YouTube then, but I had to take it down in order for me to segment it and make it easier for people to actually go to the class. Okay, so please click the link and then access the program after this class. Okay, so somebody saying, what is price action? Price action simply means action of the price. Very simple. It's that simple. It simply means, what is the price doing? Is the price moving up or down? It's an approach to the market that tries to analyze the market based on what the price of the currency asset is actually doing at that time that you're looking at it. Okay, you can use candlesticks for price action to check your price action. You can use Hekin Ashi, that's another type of candlestick. You can use line charts. You can use bar charts. Okay, either ways, at the end of the day, what you're trying, your analysis is simply based on what the price of that currency asset is actually doing at that particular time. Okay, unlike when you are trading a currency pair based on maybe, let's say, an indicator, when an indicator is doing the analysis for you and telling you when to buy or sell. So whenever you approach the market based on what the price is doing, what the actual price is doing, is called price action approach to trading. Okay, so somebody saying, can you please talk more on that drawdown? What does it mean in basic term? Okay, drawdown simply means, for instance, you start an account with $100 and you trade the account and you lose $10. You are down $10. That's 10%. That is 10% drawdown. Okay, drawdown simply means the percentage of your account that you are losing in the market at that time, at a particular given time. So let's say you start an account with $1,000 and you are losing $200. What does that mean? You are losing $200 out of $1,000. That is 20% drawdown. So when I mean prop firms give you a drawdown of 5%, it simply means that for a prop firm account, you can't lose more than 5% on a particular day, on a singular day, which is very, very constricting, really. Okay, Somebody's asking, sir, time frame to be using for trading. I use multiple time frames. Okay, I use an approach generally in the market. There are three strategies that we teach our students. One is a jackpot strategy, which is a modified style of top-down analysis. Okay, it's a modified, very highly modified approach to top-down analysis, because most people have heard of top-down analysis and they are doing it the very wrong way. They are doing it the worst way possible. So I would have been better for you to be trading with an indicator than using top-down analysis the way a lot of people are doing it. Okay, so the jackpot strategy is a modified top-down analysis for us. We have we also have a marksman strategy, which is very, very simple strategy with a very high win rate. I also have a martingale strategy. So we use multiple time frames. That's what I'm trying to say. We use multiple time frames depending on who the trader is. If you're a swing trader, you likely use higher time frames. Let's say H4 time frame, daily time frame, weekly time frame. If you are a scalper in the market, you will likely be trading on 15 minutes time frame, 1 hour time frame, or sometimes even 5 minutes time frame. So it all boils down to what you are looking at. Sometimes I'm swinging 60% of the time. My trades are swing trades. 40% of the time they are day trades. Okay. Somebody said, "What is the best session to trade converted to Nigerian time?" I don't understand what you mean by best. Okay, converted to Nigerian time. Okay. Between 8 a.m. in the morning, 6 a.m. in the morning actually, to about 4 p.m. or 6 p.m. in the evening, they are good time for trading. Market overlaps. Okay. London session we starts by 8 o'clock. US session we start by 1 o'clock. Those are the two best sessions. So far, if you're in Nigeria, you are in the best time to trade, because 6 o'clock in the morning, London session opens, runs all through to 2 p.m. when London session closes, and then 4 p.m. when London session closes, then what's the name? US session opens immediately. So you are like in the best possible time for trading. So any particular country is in Nigerian time zone, sharing time zone with Nigeria, we are the best time, because our daytime is the best times for trading. Okay. Okay, someone already answered you. Daramola said between 1 p.m. and 4 p.m. That's market overlap. Still fine. Okay. So somebody said, explain more on liquidity. Liquidity can be used interchangeably with volatility, although they don't mean the same thing. Okay, liquidity simply means volume. It's talking about volume. Why volatility talks about fluctuation. Okay. Liquidity, for instance, let me just use comparison to explain it. The forex market is more liquid market than the stock market. That simply means that there is more money. There are more people trading money in the forex market than there are trading the stock market. You understand? So it simply means that forex market is more liquid than the stock market. It's actually that simple. So liquidity just simply means where there is more volume of money. Okay. Somebody's asking, is it possible for a trader to do proper top-down analysis with only a mobile phone? If I'll be sincere with you, it's not advisable. The bigger the screen, the better. You understand? The bigger the screen, the better. Although I can possibly do everything with my laptop or maybe my tablet, but I find it hard, okay, to do analysis on phone. Okay, most of the traders that I see trading with smartphone, I have come by experience. I've known that most of them are not really profitable. By the time you start using your laptop, or maybe your screen, your a desktop to do your trading, it becomes harder and harder to do any analysis on smartphone. It becomes really hard. I mean, lately, of course, we all started with trading with phone. I started trading with mobile phone too. I started trading with smartphone too. But the day I transitioned from doing my analysis on phone, doing it on laptop and desktop, it was like a world apart. It's hard for me now to do analysis on smartphone. It's possible, yeah, but I hardly take any serious trading decision using a smartphone. So I will not advise that. Get a laptop for yourself. Okay. Okay, Daniel Anthony joining from. That's all for the questions. I'm quite exhausted already, and our time is fast spent. Okay, so that said, we'll continue again next week. Next week, by the time I discuss with the team this morning, by the time I get to the office, we'll have our regular Monday staff meetings. Then we'll decide on whether to continue with this basic series or whether to change it, because this is like too basic. Everyone, please go to that link I pasted for you guys. Let me pin it on the screen again. So that's the link right there. Go to the link, tap the link, and join the basic training so you can get access to everything I've taught here from beginning to end. This I just handled two modules out of 10 modules that are contained in this particular program. Okay, so it will actually help you to get access to the program and to learn everything you need to learn in basics. Okay, somebody asking, can I have a word with you? Yes, you can. We have an official line. Let me just share the official line with you, more like our support line, so you can get a hold of that line, and you can talk with them. If through to me, they would reach me. Okay, so but you can reach out to this number right here, 66721607. Okay, so you can reach out to the number on your screen right now, and they can patch you through to me. So that's very possible. Okay, so in the absence of any other question, I love you guys. So see you guys on Thursday. On Thursday, we are coming live here again to trade live with you, to analyze the Forex market, and to call signals for you guys on Thursday. So please don't miss the Thursday session, and please like this video, give this video a thumbs up. Like right now, everyone, give this video a thumbs up. Um, give this video a thumbs up, and subscribe if you're yet to subscribe to this channel. Okay, so have a wonderful time. Have a wonderful week trading. Goodbye.